Okay, so now we are starting question number 3. We are doing question number 3 now. Question number 3 is about corporation tax. I think this is more easier. It's all about the trading. See the pattern of examiner. Examiner has tested employment income in question number 2. Now they are testing trading income. They will test trading income with companies. Everything, almost all allowed, not allowed list will be tested here. So Crumble Limited. Yes, I'll post this on YouTube. Don't worry, I'll post. But please concentrate now. Crumble Limited has brought forward its accounting reference date to 31st March. Its summarized statement of profit and loss for the 9 months. Look at here. For the 9 months. That means right now this period is 9 months period. And it is ending on 31st March. This period is 9-month period and it is ending on 31st March. So it must be starting on 1st July. So this is your period. Listen to me. 1st July 21 to 31st March 22. You must have this much skill. See, when your period is ending on 31st March 2022 and it's a 9-month period. It's a 9-month period. So obviously it must be starting on 1st July 21. Okay. So these are some working. See, you have a gross profit. Then you have a professional fees with reference of note number 1. Then you have repairs and renewals. You have qualifying charitable donations. You have other expenses. And finally, you have operating loss. Okay. Then you have other income, property income, gains. This is gains. With on shares, you have a capital gain. You have then interest payable, which is called finance cost, and loss before tax. This is the main first thing. Okay. Now, let's move to the second requirement. Let's move to the second page. Just have a look at this page. 1 second. Look at this page. Okay. Now, my dear students, this is note number 1. Note number 1. The breakup of things which you saw in note. What is note number 1? They are saying the professional fees include accountancy fee. Accountancy fee 6,200. Accountancy fee is normally allowed, but again some dodge. See the notes. The accountancy fee 6,200 includes 2,800 in respect of the additional work arising as a result of compliance check by HMRC into Crumble Limited self-assessment tax return for the year ended 30th June 2020. No additional tax was payable as a result of the compliance check. That means we were not in fault. And this is normal tax calculation. Listen. If you remember the trading income chapter, all of you be active now. We have taken the break. If you remember the trading income chapter, in your trading income chapter, you know, normal tax computation and all these costs are allowed. Normal tax work, tax consultant fees for normal work is allowed. But yes, if you are taking a special tax advice for tax avoidance or tax evasion, then that's not allowed, and tax department does not like that. So this is normal tax computation cost. So this is perfect. This is allowed. Okay. So this 6,200 is full-time allowed. This 6,200 is full-time allowed. And I hope you remember the rules. For any expense which is allowed, we write 0. For any expense which is allowed, we write 0. Now, legal fees in connection with varying the terms of the Crumble Limited loans. See note 6, but I would tell you that hope you guys remember the trading income chapter rules. Legal fees for loan is allowed, but legal fees for equity is not allowed. Equity means owner is involved. So this is allowed. Legal fees in connection with the issue of share capital, never allowed. Equity, not allowed. No relief on equity. Then legal fees in connection with the registration of trademark, allowed. This is allowed. And let me give you one logic for this. They allow this just to motivate you to register your trademarks, register your trademark, because they will earn through registration fees as well. Tax department will earn, government will earn through registration fees as well. Okay, so registering your trademark is an allowed expense. So out of these four, 3 is allowed, 1 is not allowed, 3 is allowed, 1 is not allowed. Okay. Next. Repairs and renewals, 13100. Constructing a new car park next to the company's business premises. There was previously no car park. So this is the improvement. There was no parking. So they construct a new parking. So this is something new thing. So this is improvement, not allowed. Improvement, not allowed. Remember, even I taught you improvement in property income as well. Then repairing the wall of an office building after this is allowed. What is this? Look at the screen, look at the video. The wall was perfect, and because after some months there was a damage, so it came down and you fix it to bring it to original condition. So if you bring things to original condition, then this is called maintenance. This is called maintenance, and it is allowed. So in this note, the first one 7300 is not allowed. The second one 5800 is allowed expense. 5800 is allowed expense. Okay. Now note number 3. Qualifying charitable donations. Crumble Limited paid the qualifying for 3400. This is not allowed from trading income. This is not allowed from trading income, but this is allowed from total profits. Remember the company's format. In corporation tax format, when you go to total profits, then QCDs are allowed. Then qualifying charitable donations are allowed, but not from trading income. It's not allowed from trading income at all. It's not allowed from trading income at all. Then note number 4. Note number 4. Other expenses. Removal expenses to company's new premises. This was, yes, it is allowed. If you are, remember I gave you this example in my normal course. If you had a 500 square yards office, Bangalore, and you are shifting to another 500 square yard office, so it's allowed. This is not an expansion, but from 500 square yard to you are moving to 2000. So this is improvement. If it is an expansionary move, then not allowed. If non-expansionary move, then allowed. Fine, fine, fine. Fine is always on bad guys, and the government does not support bad guys. So this is not allowed. This is not allowed. Okay. Remaining expenses full allowable. Okay. So till now, this was the end of trading income. This was the end of trading income of this question. This was the end of trading income. Now the next note is property income. This is, to be very honest, easy marks. But one concept, you must know accounting as well. Listen. Even I promise you guys, listen to me. I will send on your WhatsApp group. I have written many differences of individuals and companies tax. Individuals and companies tax. There are many differences on individuals and companies tax. Individuals and companies tax. Okay. Individuals, listen to me. In individuals, property income is taxed on cash basis. In individuals, property income is taxed on cash basis, pure inflows and outflows. But for companies, property income is taxed on accrual basis. For individuals, property income is taxed on cash basis. For companies, property income is taxed on accrual basis. Companies, individuals cash basis, companies accrual basis. Now wait. Just write your accounting period. Just write your accounting period. I have already told you in this question, the accounting period is 9 months. In this question, the accounting period is 9 months like this. See, July, August, September, October, November, December, Jan, Feb, and March. July to March, July to March, July to March. Accounting period is July to March. Okay. So tell me, read this line. On 1st July, insurance for the year ended. See, you paid insurance. This is for 12 months insurance you paid. From this 1st July to next June, you paid from this 1st July to next June. Just honestly think about it. Out of this 12 months, how many months lies in your accounting period? Out of this 12 months, July is this July to next June, 9 months. 9 months lies this 9 months. See, this 9 months lies in accounting period, remaining 3 months outside the accounting period. So what you will do, you will do here 9 upon 12. You will only include insurance 9 upon 12. Are you getting, students? Students, are you getting? 840 is the insurance. 840 is the insurance for 12 months. Open your eyes. 840 is the insurance for 12 months. And right now we are not following cash basis. We are following accrual basis. So we need to count months. In our accounting periods, there are only 9 months. So what you will do, 840 is for 12 months. You will multiply it by 9 upon 12 to calculate 9 months insurance expense. Okay. Now, rent for the, listen to me, rent for the 6 months ended 31st May 2022. This is the rent of 6 months ending 31st May. Now look at here. Look at here. Look at here. So 6 months ending May. 6 months ending May. Sorry. This is May. The 6 months which are ending in May. May means May, then April, then March, Feb, Jan, and December. These are the 6 months. These are the 6 months ending 31st May 2022. Now, my respectable students, please think over it. How many months lies in your accounting period? These 4. These 4 lies in your accounting period. These 4. April and May is in the next period. April and May is in the next period. So in accrual basis, you have to see how many months service you have provided now. How many months service you have provided now. How many months service you have provided now. Okay. So what you will do, 6,600 into 4 upon 6. 6,600 is for 6 months and you need to calculate for 4 months. Okay. Only 4 months rental income lies in your period. And finally, a dodge. Security deposit for 2 months. Security deposit is not an income. Security deposit is not an income. Why? You receive security deposit and once the tenant leaves, you return them. You return them. So it's not your income. Security deposit is not your income. We have discussed this in class. So only 2 things. This line and this line is relevant. This is irrelevant. This is irrelevant. I hope you understood the property income part. I hope you understood the property income part. And you know what will be the property income? 4,400 is your rent. 4,400 will be your rent. And I think 630 is your insurance expense. If you take difference, you will get net property income. You will be getting net property income. Did you understand? Please write on the chat box. Did you understand? If yes, then write on the chat box. Okay, now please. Super easy. One thing is easy and one is super easy. You know, for companies, what is the format for gains? In companies, the format for capital gain is DP, less cost, unindexed gain. And from unindexed gain, you less indexation allowance, you get chargeable gain. That's it. Right? But sometimes, you know, you can do directly. Either it is okay if you write first less cost and then indexation allowance, or you can directly deduct index cost from DP. You can directly deduct index cost from DP. When you deduct directly index cost from DP, you will directly get the gain. See the question. On 22nd December 2021, Crumble Limited sold 1% shareholding in an unconnected for this is DP. DP is 25,200. Okay. The shareholding had been purchased. This is original cost. And this is, and its index cost was this. Which cost should I less? I will deduct index cost. I will deduct directly index cost. So automatically I'll get chargeable gain. No need to do in more steps. No need to DP less index cost. DP less index cost will give you chargeable gain. DP less index cost will give you chargeable gain. To be very honest, these questions are not difficult. There are more difficult questions in your kit. Is you can see this is easy. So it's a bonus thing that you can easily clear the paper if you are just active. Now the next question, the next part. Listen, for companies, listen to me. Interest expense and interest income, everything is on accrual basis. For companies, interest income and interest expense both are on accrual basis. Both are on accrual basis. Don't forget, interest income and interest expense both are on accrual basis. Listen to me. Now you tell me first you tell me what's your accounting period. All of you come on actively. 9 months, only 9 months. This is the accounting period. This is the accounting period from 1st July to 31st March. Don't forget, 1st July to 31st March. Yes, be active. The interest payable of 8750 is in respect of the company's loan notes which were issued on 1st January 2014 and were due for payment on 31st December 2021. Yes. So the loan was due for repayment on 31st December 21. However, Crumble Limited has varied. The terms has changed. Varied means changed. The terms of the loan notes so that they are now repayable on 31st December 2026. Now the loan has been extended. At the same time, the annual rate of interest payable was reduced from 7 to 4% with effect from 1st January 2022. Yes, we have negotiated with the providers of loans, so they have reduced our rate. Now, see, this line is important. Interest of 8750 was paid on 31st December 2021 in relation to the 6 months. Okay. So first 6 months interest is clear, 8750. First 6 months interest is 8750. And what there? And interest of the 6 months period ending 30th June will be 5,000. Now the next 6 months interest will be 5,000. Next 6 months ending 30th June means January to June. January to June interest is 5,000. Do you think our accounting period includes till June? Our accounting period ends on March. So for these 3 months, we have to calculate. Listen to me. They are saying the remaining interest is for next 6 months. But in our accounting period, now only 3 months will match. So we'll only include 2,500. So 8750 plus 2,500. What is our interest expense? Tell me. What is the relevant interest expense for us? 11250. Very good. 11250. So my dear students, look at here. We have to do calculation on accrual basis, and our accounting period is 9 months. Our accounting period is 9 months. So they are clearly saying, see, for the first 6 months period, it is 8750, and next 3 months it's 2,500. So automatically 1.250. Did you understand this point? Please tell me. Did you understand this point, students? Please tell me. Okay. Now wait one. Very important line. The loan notes were issued to finance the company's trading activities. The loan has taken for trading purpose. So yes, it is allowed from trading income. It is allowed from trading income P&L. Now one more dodge. It's conceptual. Listen. If I see the first page of the question, this is the first page of the question. If I start question from this loss, if I start question from 187,800, that means the finance, see, this is the interest. This is the interest. That means interest has not already deducted from this number. Interest has not already deducted from this number. So I have to deduct complete interest in the question. You're not getting. If a certain, listen, this is a concept. If a certain expense has already been deducted, if a certain expense has already been deducted from our profit and loss, and that expense is allowed by tax department, then we do nothing. We do nothing because already deducted. But if, listen again, if a certain expense has not yet deducted by the accountant, but when we go to tax department, they say, okay, we allow it. So you have to deduct it. You have to deduct it because not already allowed by accountant. It has not already deducted by accountant. So if I start question from this number, look at this number. If I start question from 187,800, I have to deduct the interest myself because not already deducted by question. This is a technical concept. And I've seen in my life, many students do this mistake. Even examiner has written comment in the examiner report about this. Be careful. Be careful. Now, next thing is capital allowance. Next thing is capital allowances. There is no capital allowance. Okay. Forget it. Year ended 30th June 21. See, we have this year, this current accounting period is 9 months. No doubt, current accounting period is 9 months. But the previous accounting period is year. See, they are using the word year. Year means 12 months. Year means 12 months. Year means 12 months. So the previous accounting period is 12 months period. Previous accounting period is 12 months period. And they are giving you the profit of previous accounting period. See, for the year ended 30th June 2021, Crumble Limited has taxable TTP, has TTP of 166,300. Corporation tax of this amount has been paid in respect of these profits. Now, I have a quiz. Why examiner is giving you last 12 months TTP? Why examiner is giving you last 12 months TTP? Can anybody tell me? Why examiner is, can anybody write? No, not for this. One more answer you can give. Why they are giving you? Yes, loss relief. Because look at here. If you, as this, our trading operations are in losses. We have a trading loss in this question. We have a trading loss in this question. So, you know, you hope you remember this relief. Trading loss can set off current year total profits. Trading loss for companies, I'm talking about companies. Trading loss set off current year set off total profit first, and then go to last 12 months total profits. Current year total profits first, and then last 12 months. And you know, in companies, you must follow this order. In companies, you must follow this order. Do current year first and then 12 months back. Do current year total profit first and then go 12 months back. Remember this. Current year total profits first and then 12 months back. This relief, we have to talk about it. Okay. Then now read the requirement. There are 3 requirements in this question. There are few requirements in this question. Look at here. Listen. Calculate Crumble Limited tax adjusted trading loss for the 9 months period 31st March 2022. This is all practical requirement, allowed, not allowed. Easy requirement. Listen, your computation should commence with operating loss figure. C. Always read the instruction that from where you have to start. Always read the instruction from where you have to start. So you need to start from operating loss figure, that is 187,800. You need to start from operating loss figure, that is 187,800. And should also list all of the items referred in notes number 1, 2, 3, 4, and 7, indicating the use of zero. Okay. For this part of the question, you are not required to refer note 5 and 6 is irrelevant. Property income and gains are irrelevant because already they have accounted for after operating loss. They have accounted for in this question gains and property income separately. So don't worry about it. Now, B, before taking account of any possible loss relief claim, calculate Crumble Limited taxable total profits. Means you need to make the company's pro forma. You need to make the company's pro forma. You remember I used to tell this dialogue in the class. If you ever need to calculate tax for individuals, if you are required to calculate the tax for individuals, there are 3 columns in your mind: non-saving, interest, dividend. Whenever somebody tells you to calculate tax for individuals, non-saving, interest, dividend will come in your mind. But if you are required, if you are asked to calculate, if you are asked to calculate companies tax, so only one column. For companies, there is only one column: trading income, property income, gains, and interest income. Remember, you will get total profits, and from total profits, you will deduct QCD, you will get taxable total profit. That's it. In companies, there is only one column. So you need, in B requirement, you have to make that column. In B requirement, you have to make that column, but they are saying before taking account for any possible loss relief claim. So my dear student, no need to set off any loss in requirement B. No need to set off any loss in requirement B. Okay. Now, next thing, state by which date. I'm discussing requirement here because I'm going to change the screen. You know, I'll change the screen for Excel work. State by which date Crumble Limited must make a claim if it wishes to set its trading loss for the 9-month period ended 31st March 2022 as calculated in Part A against the company's total profit for the year ended 30th June 21. Now tell me. Very easy. First, let me introduce you. You know, there are different losses. There are different reliefs for trading losses. You can carry forward your trading loss. You can carry back your trading loss. You can do current year. So there are lot of options we have. Lot of options we have with trading loss. So how will tax department come to know what relief we want? How will tax department come to know what relief we want? So we need to write a letter. We need to inform them. We need to claim from tax department what we want. We need to claim from tax department what we want. Okay. So there is always a claim due date for claim. There is always a due date for claim. And my dear student, look at here. If I want to do current year set off and carried back, if for companies, I'm talking about companies. For companies, if I want to do current year set off and carried back, the limit is 2 years. The limit is 2 years from the end of the loss making period. The limit is 2 years from the end of the loss making period. I hope you remember you did the corporation tax. Let me recall you. There is a question which I teach in class Half-Life Limited. There is a question which I teach in class Half-Life Limited. Remember, in that question, I introduce these dates. I introduce you these dates. So listen. What's your loss making period? Can anybody tell me? Your loss making period is 31st March 2022. Our loss making period ending on 31st March 2022. Our loss making period ending on 31st March 2022. So you have 2 years from the end. 2 years from the end of our loss making period, that is 31st March 24. This is the answer. 31st March 24 is the answer. I request you guys to please read this requirement again in a very calm way. If you read it, you will understand it. One more requirement. Calculate the amount of corporation tax which will be repaid by HMRC if Crumble Limited makes this loss relief claim against the company's total profits. Obviously, listen, when we are in the same company, we are not talking about group of companies. Here it is the same company. So when same company set off, then same company set off always total profits. Current year total profits first and then 12 months back. Current year total profits first and then 12 months back. Total profits, not TTP, total profits. So they are saying how much relief, we'll get in last 12 months in the year ended 30th June 21. They are saying how much relief will we get in last 12 months, only for last 12 months. Now read the note. You should take into account any necessary loss relief claim against the total profit for the 9 months period. Yes. If you want, see, let me tell you, see, wait. This is your 31st March 2022, 9 months. Okay. And this is your 12 months of year ended 30th June 21. Okay. So if you want to go back, and set off, you can't set off the total profits directly. For companies, you cannot go back directly. You need to do first, listen. First, you need to set off current year total profits first, and then you need to go back here. Okay. So that's what examiner is saying. See, examiner is very helpful. Examiner is giving you idea. That if you want to go back, first kill the current year total profits. If you want to go back, first kill the current year total profits. This is what examiner telling you. Now, my respectable students, we have discussed the question. It won't take much time now. Only Excel work is left. Don't worry. And if you want to take the picture of the question, see, if you want to take the picture of the question, let me move you the question. This is the first page of the question. This is the first page of the question. This is the second page. If you want to take the pic, because I'll change the screen. This is the third page, please. And this is the last page. One thing which I would like to highlight before I change the screen, see this number, all of you, please look at this number. That for the last, see this, for the last 12 months, total taxable profits are 166,300. Last 12 months, you can write somewhere. Please write it because I'll change the screen. Last 12 months, total taxable profits are 166,300. This much profit we have in last year. Please write it somewhere. Now listen. I hope you can see the screen. Now, Let me move to Crumble Limited. Let me move to Crumble Limited. Okay. So, okay, one thing. See, when I solve the question, I already write these theory with me before because I need to save the time. I want to give more time on explanation because the objective of my class is to make you understand. It's not my objective to teach you how to write operating loss word. It's not my objective to teach you how to write accountancy fee. That's not my objective. Obviously, we are mature enough to write all these things. A kid can write this, okay? But in the exam, you need to do it from zero, okay? From zero, you have to do it. But just to save my time, I do it these things before the class. So now, what is the operating loss? Can anybody tell me what is the operating loss? It's 187,800. Operating loss is 187,800 negative. Now, next thing is accountancy fee. Accountancy fee was allowed expense. Accountancy fee was allowed expense, and for allowed expense we write 0. For allowed expense we write 0. Then we have compliance check. Compliance check is also allowed. Compliance check is also allowed, and although it was included in accountancy fees, but I have written in a separate line, it's allowed. Then you have legal fees in connection with the issue of loan notes. It's also allowed. Legal fees for issue of loan note allowed, but legal fees for the issue of share capital is not allowed. That is 9,300. Okay, so we'll add back. Add means positive. Then legal fees in connection with the registration of trademarks, it's allowed. Then construction of a new car park. I told you new car park is improvement. It's improvement, so 7,300 will be added. Then repairing the wall of an office building, it's allowed, so we'll write 0. Qualifying charitable donation, not allowed from here, but yes, it is allowed from total income. So QCD is 3,400, not allowed. Then removal expenses allowed because it was not an expansionary move. I told you. Fine is never allowed. We'll add back. Then finally, remaining expenses. It was written remaining expenses were all allowed. And now tell me, interest payable. Hope students you remember interest payable. I taught you interest payable was 8,750. It was 8,750 plus 2,500 for the three more months. 2,500 for the 3 more months. Remember? So it was I think 11,250. Remember, it was 11,250, and as the loan was taken for trading purposes, so that's why it's an allowed expense. And you will deduct it. So you will write minus 1125. Okay, so let's calculate the trading loss. 177,850 is your trading loss. Your 7-mark requirement is done. My dear students. 7-mark requirement is done. Did you understand it? If yes, then please write on the chat box. If you understood it, then please write on the chat box. Now one thing, listen. See the loss. Open your eyes and see the loss. This is a very big loss. And you know, last year profit is only 166 something. I just showed you in the question. Remember, the last 12 months profit is only 166,000. So yes, this loss can easily go back. This loss is big enough to easily go back. Just make up your mind. I'm making up your mind for the last requirement. We are making up mind for the last requirement. Now, the next thing is property income. Requirement number B, they told you to calculate property income and gains. Property income and gains. Okay. Listen, Hope you remember. They gave you rent for 6 months. 6 months rent was 6,600. 6 months rent was 6,600, but on accrual basis, we'll only include 4 months. We'll only include 4 months. So what we'll do, 6,600 multiply by 4 divided by 6, right? This will be 4,400. This will be 4,400. Then security deposit is not an income at all. Security deposit is not an income at all. But now they gave you insurance of 840. They gave you insurance of 840, but that 840 was for 12 months. 840 was for 12 months. So multiply it by 9 by 12. 9 by 12. So this will be I think 630. 630. Okay. So let's calculate this is your property income. This is going to be your property income. Now, wait. For chargeable gain, very simple. DP less index cost. DP less index cost. What was your DP? Your DP was 25,200 minus your index cost was 13,600. Remember? So this will be 11,600. 11,600. Okay. Now, can anybody tell me total profits? Total profits. Can we calculate total profits? Wait. This is property income. This is gains. This 15,370 is your total profit. Now wait. We are in companies. In the next requirement, we have to make the pro forma. In the pro forma of companies pro forma, there is trading profit, property income, gains, and interest income. Remember these 4 things: trading income, gains, property income, and interest income. Wait, in trading income, we have a negative number. See the screen. In trading income, we have a negative number. So when we make the pro forma, listen to me very carefully. When we make the pro forma, if we have any negative number, we write 0. When we make pro forma, if we have any negative number, we write 0. We write 0. Okay, right? So for trading income, no need to write anything. That means 0. And yes, this is your property income. This is your gains. So automatically you calculated the total profits. Automatically you calculated the total profits. Okay. Now from total profit, you deduct QCD. In this question, I think QCD was 3,400. QCD was 3,400. So now let's calculate the TTP. 11970. So my dear students, that's the end of part B. That's the end of part B. So you have done major 2 parts. You have done major 2 parts. Let me move the screen so that you can see the upper part as well. See this, please. Only 5-6 minutes are left. Please don't be relaxed and look at the screen carefully. Now, third requirement, I have already told you about the claim date. Remember, I have already told you, see that it is written here. It is written here. Claim date, I have already explained you in the question. Claim date. For loss against total profit. For loss against total profit, the claim date is 2 years. For loss against total profit, the claim date is 2 years. The claim date is 2 years. Now the last requirement. Listen to me. Just think over it. This, my dear student, please Operate with me. This was your trading loss. Keep this number in your mind. Just last 5 minutes. This was your trading loss, 177,850. This, keep this in mind. If you want to go carried back 12 months back, if you want to go 12 months back, first you need to set off current year total profits. If you want to go 12 months back, first you need to set off current year total profits and see the screen. What are your current year total profits? Your current year total profits are 15370, not TTP. When you are in the same company, you always set off total profits, not TTP, not taxable profits. So from 177, see, from 177,850 loss, first you will sort off this. First you will set off 15370. Now what will be the remaining loss? Come on, all of you take out the calculator. All of you take out the calculator. 177,850 minus 15370. What will be your remaining loss? The remaining loss can go back. The remaining loss can go back. I think it will be, let me do it with my cell phone. Wait, we'll do it formally also. Wait, 177,850, 177,850 minus 15370. Yes, 162480 loss, you can carry it back. 162480 loss, you can carry it back. And listen, in last year you have profit of 166 something. In last year you had profit of 166,300. So when you have profit of 166,300, you can easily set off 162480. You can easily set off 162480. And yes, you will get 19% refund. Tax rate is 19%. So you will get 162480 multiplied by 19%. You will get the refund of 162. Yes, my students, you have written 162480 multiplied by 19%. So let me write this last requirement. Let me type this last requirement in front of you. Minus 15. This amount of loss will be carried back. Okay. Now, this is less than Crumble Limited's taxable total profits of 166,300 for the year ended 30th June 2021. So the corporation tax repayable will be, see, 162480 times 19% will be 30871. 30871. That's it. This amount of refund you will get 30871 refund you will get back. 30871 refund you will get back. Did you understand the question? Did you understand? Now listen. I have a question. In your whole life, you always stay happy or you have some plus minus as well? There are happiness and then you feel sad sometime as well. So same goes with the exam. In the exam, you not always win. You don't always win. You don't score 100 marks. 100 marks is the exception. So yes, this plus minus. So if it is a 15-mark question, you can do 5 marks mistake. You can do 4 marks mistake. You can do 3 marks mistake. You can do 6 marks. Still, you will get 9 or 10 marks. Still, you will clear the paper. So always look at the positive side of the paper. Always look at the positive side of the paper, to be very honest. And you know, I have many examples in my career that there are students, they start course in last 1 month. They take admission in last 20 days and they clear. They take admission in last 20 days and they clear the paper. And there are students, they take admission 6 months before and they don't clear. I repeat, there are students who take admission 20 days before and they clear it. They start studies 20 days before and they clear the paper. And there are students who start 6 months before and they don't clear. So thing is your objectivity, your focus. And you know, now worldwide inflation is high. Even in some countries like in Pakistan, it's right now tough time. Exchange rate is very, you know, inflation, exchange rate, all these conditions are tough. So at least you can support your parents by clearing the paper in first attempt. Just think over it. You can support your parents by clearing your paper in first attempt, because now we have less resources. So kindly don't waste a single minute. Still you have time. Still you have 15-20 days. 15-20 days are enough. You can still work a lot. You can still work a lot. And I have recorded many revision days of CGT, IHT, value added tax. Listen, in the last session I recorded for MTQ's class separate. We have the latest past paper of March-June 2022 attempt as well. So all these things are available. Be active on WhatsApp group and be disciplined on WhatsApp group. Please don't confuse anybody. The objective of WhatsApp group that you can do a positive discussion. Don't demotivate anybody. Don't discourage anybody. Okay. So take care and that's the end of the class. Allah Hafiz. Best of luck for your exam. Something different. Late payment interest is something different. This is for exact months. Next thing. Mixture Limited is a large company, therefore has to make quarterly installment payments in respect of its corporation tax liability. Now I would like to say this question is so far the easiest question of all this past paper. All of them, easiest of all of them, I'm telling you, easiest. Just concentrate, you will understand. There are two types of companies, a small company and large company. Small company and large company. Remember, small company pays tax. Small company pays tax after the end of 9 months plus 1 day. From the end of the accounting period, 9 months plus 1 day. But yes, large company pays tax in installments. Large companies pays tax in installments. Okay. And now how to identify between the large and small? How to identify between large and small? Look at here. If your augmented profits are greater than limit, if your augmented profits are greater than limit, then my dear students, if your augmented profits are greater than limit, then you are a large company. If your augmented profits are greater than limits, then you are a large company. What is the limit? The limit is, the limit is 1.5 million. Now the next question. Do we apportion the limits because of anything? Yes, 2 factors. Because of 2 factors, we have to apportion the limits. Number 1, if the accounting period is less than 12 months. If the accounting period is less than 12 months, then you have to apportion the limit. And if you are the part of 51% group of companies, so according to the total number of members, you have to apportion. You have to apportion, right? Okay. So now, first, the good news is the accounting period is exactly 12 months. Open your eyes, your accounting period is exactly 12 months. Your accounting period is exactly 12 months. So no need to apportion the limit because of accounting period. No need to apportion the limit because of accounting period. But yes. Mixture Limited has 251% group of companies for many years, means 5-10 years. So just think, this is mixture, and let us say 70-70, A and B, 251% group of companies. So how many total members are there? How many total members? Mixture plus 251% group. So there are total 3 members. So you need to apportion the limit by 3. So your limit is 500,000. Don't forget, your limit for current year is also 500,000, and the last many years your limit is 500,000. Last many years your limit is 500,000. Be very smart. This is very easy if you remember the rules. If your memory is good, you are a winner. Now next, for the year ended, this is your year. For the year ended 31st March 2022, Mixture Limited has taxable total TTP of 470, and dividends from non-group companies. Non-group companies means less than 50% holding, is 45,000. So now wait, you remember how to calculate augmented profits? You remember how to calculate augmented profits? It's TTP, which is 470. It's TTP, which is wait 470,000 plus dividends from unrelated companies, which is 45,000. Can anybody tell me the AP? Can anybody tell me the AP? How much is the AP augmented profit? 525 or 515? It's 525 or, oh sorry, 515. Yes. Wait. Now tell me, as your AP is greater than, look at here, AP is greater than 500,000. Your augmented profit is greater than 500,000. So this year you are a large, for sure. This year you are a large company. This year you are a large company. But if you have really taken my classes, or if you have taken classes from anywhere, you know there is one special exemption. If this is the first year of your large company, that means if you were not a large company last year, if you were not a large company last year, then yes, you can leave paying through installments. You can stay away from installments if you are not large last year. But look at this, look at the story. The company had same level of profits for the year ended 31st March 2021. That means last year the story was still same. So that means we were also large company last year. We were also large company last year, and this year also we are large. So yes, we can't stay away from installments. We can't stay away from installments. We have to pay tax in installments, 4 installments. As it is a 12 months accounting period, so we have to pay tax in 4 installments. To be very honest, if you know this topic, these are cash 5 marks. I'll show you the requirements. Quick 5 marks. Quick 5 marks. Will tell you. Wait. Don't read any other thing. No need to read any other thing. Leave it. Okay. Now one thing. Oh, I pray that you remember. I pray that you remember this thing. Listen. Dividends are not taxable at all. Dividends are not taxable at all in companies. You always apply 19% on TTP. For corporation tax purpose, you always apply 19% on TTP, right? Let's move to the requirement. Let's enjoy the requirements now. This is the first requirement. See. Explain why Mixture Limited is classed as a large company for the year ended 31st March 2022. Because the current year augmented profits are greater than the limit. The current year augmented profits are greater than the limit, as well as this company was large company last year. As well as this company was a large company last year, right? Or you can simply say, this year, this company is large because the AP is greater than the limits. That's it. Forget about the last year. This year, this company is large company. They are not talking about installments. They are not talking about installments. They are just saying it's large or small. Yes, large. Why? Why large? Because the augmented profits are greater than limits. Very simple. Next thing. Calculate the Mixture Limited Corporation tax liability for the year ended 31st March 2022. 30 seconds. Yes, wait. What is TTP? TTP is 470K 4 times 19%. 470,000 times 19%. Come on, do it. 470,000 times 19%. Come on, do it. Tell me. 470,000 times 19%. How much? 89,300. Okay, thank you. This is your corporation tax. Now the next requirement. Explain when this will have been paid. Explain when this will have been paid. You have to pay in 4 installments. 4 installment. And you know how to calculate one installment? Divide by 4. Divided by 4. Come on, do it. 89,300 divided by 4. What is your first installment? What is your one installment? 22325. 22325. Excellent. 22325. And now when you have to pay, it's all cash marks. From the beginning of accounting period is 1st April. The beginning of accounting period is 1st April, right? So just count the 7th month. 7th month is October. On the 14th of October, for the first installment, we have to pay on 14th October 2021. Then after 3 months, 14th January, then 14th April, and then 14th of July. Okay. See, you have just earned 5 marks. 5 marks from this. You have just earned 5 marks. What else you want? Now listen. Now listen. I'll show you this how to do on the Excel. Just you have to write it, nothing else. Next thing. Capital expenditure. Student, look at here. Look at here. You know, this is a very special part of your capital allowance, that what expenditure to be included as a plant and machinery like normal capital allowance, and what is the part of building. For building there is a special thing, IBA. For building there is a structure building allowance. That is a separate topic. That is not plant and machinery. Building is not plant and machinery. Hold, go slow. Whenever any teacher teaches you capital allowance, they first teach you like 2-3 classes that capital allowance is on plant and machinery, and the teacher straight away writes on the class. Teacher straight away write in the class that no capital allowance on land and building. No capital allowance on land and building, right? Straight away. Yes, in the end, we teach structure, building allowance. That is something different. That's a new thing. Okay. So this is very important thing. This is very important. Look at here. What will, if you are buying a building, so there are a lot of things in the building. In the building, there are lifts. In the building, there are ventilation system. In the building, there are movable walls. In the building, there are fixed wall. In the building, there are stairs. In the building, there are doors and windows. In the buildings, there are ceilings, false ceilings, right? So there are many things. There are many things in the building. So now to cut the story short, what things inside this building will be treated as a plant and machinery, will be treated as a plant and machinery for capital allowance purpose? Listen, go very simple. All the walls, all the fixed walls, doors, windows, ceilings, all the fixed walls, doors, windows, ceilings, stairs, these all are the part of building. Just teach you in a different style today. You know, when you buy a new home, like in builder's condition, you know, we use a word in the common, builder's condition. So in builder's condition, yes, they give you doors, windows, they give you doors, windows, ceilings, stairs. Yes. So these are the things which are considered as part of building, not part of plant and machinery. But yes, if there is a movable wall, you have done this 2 or 3 times in your course. If there are movable walls, then movable walls is performing a function. Movable wall is considered as part of plant and machinery. Otherwise, these doors, windows, ceilings, stairs, doors, windows, ceilings, stairs, these are considered fixed walls. These are considered as part of building and they are not part of plant and machinery. Okay. So be very careful, be active, and let's pick things. What are plant and machinery and what are not the part of plant and machinery. Okay. Let's start. Read it. A new freehold building was purchased. A new freehold building was purchased. The purchase price included 22,200 for a staircase linking 2 floors of the building. Staircase is not plant and machinery. Staircase is part of building. Staircase is not plant and machinery. So we don't need to include it. Okay. 16,400 for sprinkler equipment. See the word equipment. Equipment itself is a plant and machinery. All equipments are plant and machinery. The firefighting equipment, these all are plant and machinery. Yes. Then the fire alarm system. Yes, this is part of plant. 18,700 for doors and windows. No, I just told you doors and windows are part of building. Doors and windows are part of building. Remember? Then 27,100 for ventilation system. Yes, this is part of SRP. This is part of a special rate pool we have done in the question. So from this first paragraph, what to include? Staircase, not plant and machinery, it's part of building. The equipment, the fire alarm equipment, yes, it's plant and machinery. Doors and windows, never. Doors and windows are part of building. You can search on Google as well. It will come in the first. 27,100 ventilation system, yes, it's part of plant and machinery, and you have done in your basic course SRP. It comes in SRP, ventilation system. The next thing, machinery was purchased for 76,600. Machinery is always part of plant and machinery, yes. At the same time, a 9,200, this is from old past paper, nothing new. This is old thing. Quick response is needed. At the same time, a further 9,200 was spent on building alterations which were necessary to make the installation of this machinery. When I teach, I give example of IS 16. Listen, as the machinery is plant and machinery, so the alteration which is needed to do the machinery, the alteration which is needed to fix the machinery is also part of plant and machinery. Like in IS 16, remember we capitalize installation cost. So yes, these two, this one plus this one, these both things will be part of plant and machinery. Yes, these two things will be part of plant and machinery. Again, one thing from the old course, previous past papers. Movable partition walls were purchased 33,800. Yes, movable walls are always part of plant and machinery. Movable walls are always part of plant and machinery. Movable walls are always part of plant and machinery. Okay, now next, a new decorative wall was constructed at the boundary business premises at a cost of 44,700. Decorative wall is a fixed wall. It's a fixed wall, and you know, fixed wall is a part of building. Fixed wall is a part of building. Yes, movable wall is part of plant and machinery. Movable wall is part of plant and machinery. Fixed wall is the part of building. So this is again one more 5 marks. One more, no need to calculate capital allowance. Just you need to pick, you need to choose which one are plant and machinery and which one are not part of plant and machinery. So just take 1 minute to read it again, and then I'll show you the requirement. Then read the requirement. Again. Easy. Explain. List the expenditure. See this B part. List the expenditure by Mixer Limited during the year ended, which will have qualified as plant and machinery for capital allowances purpose. That's it. 4 marks. Your answer should indicate by the 0 of any expenditure which does not qualify as plant and machinery. As plant or machinery, you are not expected to calculate the capital. See, no need to calculate the capital allowance. No need to discuss the rate as well. It's also done. This requirement also done. Students. Now, to be very honest, a general requirement, and it is present. To be very honest, it is present in my normal course. I always teach openly with detail. Right now, I'll give you the summary, but this thing I teach in detail. You know, in your course, 2 things can be depooled. In your course, capital allowance, 2 things can be depooled. Number 1, privately used assets by owner. Owner in individuals, you have to depool. That is a must depool thing. And the second thing is short life assets. Short life assets should be depooled. Short life asset, you have the option to depool. You have the option to depool. Now tell me, why do we? It is written in my notes. I know my notes. It is written in my notes. Why do we depool SLA? Why do we depool SLA? Why do we depool SLA, short life asset? You know the answer? Because we normally expect balancing allowance on the disposal of SLA. And just think, if you have depooled it, you will get immediate balancing adjustment. On SLA. But yes, you know the definition of SLA. What are short life assets? Short life assets are those assets which have expected life of around 9 years, less than 9 years. Means year of purchase plus 8 years, year of purchase plus 8 years, year of purchase plus 8 years. Remember, year of purchase plus 8 years. And if you have not sold it, by year of purchase plus 8 years, then the balance will be transferred into main pool, general pool again. You can only enjoy this exemption. You can only enjoy this exemption for year of purchase plus 8 years. Hope you remember the rules. But yes, one thing is for sure. This is a new thing I'm telling you. If you are eligible, okay, let me ask a quiz, one special quiz. Can anybody tell me short life assets belongs to which family, main pool or special rate pool? Write on the chat box. Short life assets belongs to which family? Tell me. Main pool or special rate pool? Very good, very good. Main pool. No, it's main pool, main pool. Main pool, yes. It's main pool family. Short life asset related to main pool family. And you know, nowadays, open your eyes, open it. Nowadays, just for companies. You know, there is 130% super deduction. For companies, there is 130% super deduction. 130% super deduction for main pool. Remember? Yes or no? So now just use your brain. Use your brain. You are old enough, mature enough to understand my words. Listen. If you are eligible for 130%, go for it. If you are eligible for 130% now, what are you waiting for? Just go for it. Then no need to do any short life asset election. No need to go for 18%. It's 130% is better than everything. 130% is the best of all. You're not getting. If you are eligible for 130% on main pool, and this, yes, short life asset belongs to main pool family, then just use a matchbox. Use a matchbox or a lighter on short life asset election. Why go for 18% if you are getting 130% now? Are you getting? Is this working? Is this working? So one point you can write is that when you can get 130% on short life asset, then no need to do any election or depool. Then no need to do any election of depool. Kindly write on the chat box, did you understand this 130% point? Because we are doing companies question, not individual. Yes, for individual, there is no 130%. But for companies, there is 130% super deduction. Please tell me, did you get, or have you done the course or not? Or you guys are still taking the classes? Now, my dear students, these 2 or 3 points, you can write 2 or 3 points, 2 marks, 2 points enough. Now, next, the last thing is property business income. Property business income. Look at here, property business income. I have a question from all of you. I have a question from all respected students. Listen, in individual, property income is taxed on receipt basis, cash basis. But for companies, it's accrual basis. Remember, for individual, property income is taxed on cash basis. For individuals, property income is taxed on cash basis. But for companies, it's accrual basis. It's accrual basis. Remember? So now, right now, we are doing companies, not individuals. Right now, we are doing companies, not individuals at all. We are doing companies, so it's accrual basis, okay? And for next thing, in companies, we compute everything for accounting period. In companies, we compute my innocent student everything for accounting period. And in this question, the accounting period is 31st March 2022. The accounting period is 31st March 2022, and plus it's a complete year. So complete 12 months when it is ending on 31st March 2022. So it must be starting at April. It must be starting at April, okay? So let me write, let's do it like babies. Let's be infants. Let's be infants like the way you are taught in the class. Be infants. You are infants. Come on, start. It's April, May, June, July, August, September, October, November, December, Jan, Feb, and March. Okay. This is your 12 months. This is your 12 months. Okay. And this is 2021. See, till here it's 2021, and then these 3 months are 2022. Okay, 1st April 21 to March 31st March 2022. 1st April 2021 to 31st March 2022. Okay, let's start. Mixture Limited lets out a warehouse which is surplus requirements, although the property was empty between 1st September 21 and 28 Feb 2022. Okay. The following income and expenditure relates to the year ended 31st March 2022. Don't sleep. On 1st January 21, insurance this is for the 12 months. See, this is the 12 months insurance. Insurance 12 months. But in these 12 months, see, this is from 1st January 21 to December 21. How many months out of these 12 months lies in our accounting period? Tell me. This is from January to December 21. The 9 months, see, these 9 months lies in our accounting period, 9 months. So what we'll do, we'll take 1700 times 9 upon 12 in our accounting period. 1700 times 9 upon 12, because now it's accrual basis, not cash basis. It's accrual, not cash. So just count the number of months which falls in your accounting period. So it's 9 months. Okay. Now, on 28th March 2021, 28th March 2021 physically is last accounting period. 28th March 21, the date is last accounting period, but let's see the period for which it belongs to. The period rent for the quarter ended 30th June 2021. See, that means this rent is for April, May, and June. This 7800 rent is for April, May, and June. April, May, and June. April, May, and June. And yes, April, May, and June falls in our accounting period. So we'll take it complete as it is. We'll take this 7800 as it is. Although it is paid last year, we are not working on cash basis. We are doing on accrual basis. Please don't sleep. Then on 4th July 2021, on 4th July 20, rent for July and August. Yes, July and August again. Rent for July. I've written June 2 times. Sorry, I've written June 2 times. Okay, that's my mistake. For July and August also falls in our accounting period. July and August also falls in our accounting period. So we'll take complete 5200 as a rental income. We'll take complete 5200 as a rental income. Okay. Now, next. Advertising for tenants. Advertising for tenants. See the date, 5th December 21. Yes. Advertising is a one-off expenditure. We never apportion it. Advertising is a one-off expenditure, teacher. And yes, if it falls in your accounting period, we'll account for as it is. Yes, this will be an allowed expense. Next. On 1st January, insurance for the year ended 31st December 2022. Now, this 1900 is the insurance from 1st January 2022 to December 2022. So only the 3 months. Only the 3 months falls in our accounting period. Only January, Feb, March, only the 3 months falls in our accounting period. So we'll take 1900 times 3 upon 12. 1900 times 3 upon 12 in our accounting period as an allowed expense. Okay. From January 2022 to December 2022, this insurance is for 12 months, but we'll only include the 3 months because we are working on accrual basis. Now, one interesting thing after a long time. On 1st March 2022, see this date. See, this date lies in our accounting period. 1st March 2022, we received the premium. 18,000. We received the premium 18,000. Can you see? Now, this is for individuals and companies both. Listen my voice. Premium is always taxed on receipt basis. Yes, excellent. Somebody's just texted. Premium is taxed on receipt basis. Yes, it is taxed on receipt basis for companies and individual both. But you know, there is a special working for this. 18,000 is the premium received less 2% into n-1. Remember this? Yes, very good. So how will you do it? You will do it like this. Just premium received 18,000 less 2% into 5 minus 1 multiplied by the premium. So how much is this? 8% of 18,000. 8% of 18,000. Can anybody tell me? It's 1440. Thank you. So this is your taxable premium, which will be included as a property income. Taxable premium. How much? 16,560. Thank you. This 16,560 with this 16,560. This 16,560. This 16,560 will be included as a taxable property income. Taxable property income. Okay. Again, this is not difficult. It has been done many times in the class. Last, on 1st March 22. Now listen, students, this is a technical issue. Rent for the quarter ended 31st May. See, quarter means 3 months. 31st May is 8,400. Listen, March, April and May. See, March, April and May. For these 3 months, the rent is 8,400. For these 3 months, the rent is 8,400. But can you tell me, our accounting period is ending on March. Our accounting period is ending on March. So only 1 month is relevant for us. Only 1 month out of these 3 is relevant for us. So we'll do 8,400 multiplied by 1 upon 3. We'll include 8,400 multiplied by 1 upon 3 here. 8,400 multiplied by 1 upon 3. Why? Because it's not cash basis. For companies, it is accrual basis. For companies, it is accrual basis. Please read this. Okay. I request you to read this again. This part is technical. Yes, this property income is technical area. If you don't have good grip in accruals concept, then you can do mistakes here. Now let's read the requirement, last requirement. C, calculate calculate the property business income figure which will have been included in the mixture limited taxable profits for the year ended 31st March 2022. It means you don't need to calculate any TTP. You don't need to calculate any TTP. Just calculate the property income. 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 Okay. Now, my dear students, first thing, you must have, I'm going to shift myself on the Excel sheet. Lot of theoretical discussion as well, which has already been written. So it will not be a time taking thing, but yes, you must have question with you. You must have question with you. I have sent you on the WhatsApp group. If you don't have the question, take the picture. Wait, take the picture. Wait, this is the picture you can take. If you want to take the picture, let me show you the question. Take the picture of the question, this part, and then this part. Okay, now I'm moving myself to the Excel part. Okay. See, this is the first part. This is how you have to write the first part. The first part. You remember there were three companies. 251% group of companies, and one is mixture limited. So yes, the limits will be divided by 3. Limits will be divided by 3. 1500,000 divided by 3 is 500,000. Can you see this? And now, what is your augmented profit? 470 plus 45, 47, 45 is 515. So as your augmented profits are greater than this limit of 5 lakh, yes, you are a large company. This is simple 2 marks, no other discussion. This is greater than 500,000 limit, you are a large company. That's 2 marks you have done. Now, how to calculate corporation tax liability? Corporation tax liabilities always calculated on TTP times 19%. TTP times 19%. TTP is 470,000 times 19% is 89,300. Okay. And now, as this company is a large company this year as well as in the last year, so there is no exemption. So yes, the company will have to pay in 4 quarterly installments. And remember, you guys calculated this installment yourself. We just did it. Okay. And now, what are the due dates for these installments? 14th October 2021. Then after 3 months, 14th January 2022. After 3 months, 14th April 2022. After 3 months, 14th July 2022. So this is total 5 marks for you guys. This is A1 and 2, total 5 marks, for you guys. Total 5 marks for you guys. Okay. Now let's move to the next capital allowances thing. Look at here. These all are the names. I just told you there are few things which are part of building, not plant and machinery. Staircase is part of building, right? 0. But yes, sprinkler or equipment 16,400. This is equipment. This is part of plant and machinery. Doors and windows always part of building. Then yes, ventilation system is part of plant and machinery, and it comes in SRP. This is old thing, not a new thing. So this is 27,100. Then you have machinery. It was 76 600. Yes, then building alterations, installation to do the machinery is also part of plant and machinery. Previous course, old course thing. Then movable partition walls, also part of plant and machinery. Movable partition walls, also part of plant and machinery, 33,800. But yes, the fixed wall is always building. The fixed decorative wall is always building. It's not part of plant and machinery. So finally, these are the costs which you have to list down. These are the costs which you have to list down for plant and machinery purpose. For plant and machinery purpose. Did you remember I just discussed with you? Please write on the chat box. Did you remember I just discussed with you guys all these things? Did you remember? Okay, now the next is about short life asset. The next thing is about short life asset. Very simple. You have to write 2 or 3 points. Normally 2 points are enough. See, the short life election will be beneficial when asset is disposed of for less than its tax written down value. Yes, when it is sold for less than value, then you will get the balancing allowance. You know how you get the balancing allowance? Whenever the proceeds are less than NBV, whenever the proceeds are less than NBV, then it's a balancing allowance, right? And the balancing allowance is beneficial if you want to depool it within 8 years of the accounting period in which it was purchased. Yes, this is year of purchase plus 8 years. However, see, this is the technical point which I told you for the companies. However, there is no benefit to a short life asset election where the 100% annual investment allowance can be claimed or the super deduction of 130%. I have a question, all of you, please. Why examiner has written 100% AIA? Because for individuals, AIA is still available for on short life assets. For individuals, AIA is still available on short life assets. But for companies, now new course for the companies, for main pool items, now they have super deduction of 130%. Super deduction of 130%. Super deduction of 130%, right? But one thing you guys can keep in your mind, this is a big dodge. If you want to score the just for position holders, I'm telling you one thing. Just for the sake of position holder, for super deduction, you have to buy new assets. For super deduction, you have to buy new assets. Remember? Then the balancing allowance given when the asset disposed of accelerates the allowances rather than these being given on reducing balance basis. Yes, remember, when the asset is depooled and you sell it, you get the immediate balancing adjustment on depooled asset. You don't get it with number of years. No, you get it immediate. And that immediate is beneficial when you depool it. That's why you depool it, because you expect, you want immediate balancing allowance. You want immediate balancing allowance. So out of these 3 points, you can write only 2. That's also good. 2 marks, 2 points are more than enough. 2 marks, 2 points are more than enough. Now, the next thing is about, the last thing is property income. Property income, listen. In the property income, check the question. First of all, let's do premium received. How much was the premium received? 18,000 less 2% less 2% into n minus 1. What is n minus 1? N minus 1 is 5 minus 1, okay? 5 minus 1. Oh, wait, sorry. I forgot one thing. Equal to minus 18,000 times 0.02, bracket open, 5 minus 1. Yes, I forgot to write 18,000. This is your taxable premium, the first thing. Now, how many rents we have to take? How, go and check the question. How many rents are to be included? Go and check the question. Let me show you. Let me show you how many rents are relevant. 7,800 we'll take complete. 7,800 was for April, May, and June 21. Then plus, then you have to take 5,200 as it is. Then you have to take 5,200 as it is. Then only 1/3 of 8,400. Then 1/3 of 8,400. 8,400 times 1 divided by 3. This you have to do. Okay, right? This thing. So what is the number? What is the number? The number is 15,800. 15,800. Now, advertising was full-time allowed expense. As what advertising complete 900 was allowed expense, as it is a one-off expense. Advertising falls in your accounting period. It should be taken complete allowed. How to calculate insurance? Look at here. Insurance, for insurance, the first 9 months. The first 9 months is how? 1,700 times 9/12. Bracket close, then plus. Second number was 1,900 times 3/12. 1,900 times 3 divided by 12. 1,900 times 3/12. This will be 1,750. You can do it. 1,750. This will come out to be 1,750. Okay. So these two are the allowed expense. The above two. See, this is the income. This is your income. 16,560 is your first income. Rent receivable is your second income, and these two are your expenses. So how to calculate the total property income? How to calculate the total property income? This is 29710. This is 29710 is your total final property income. Total final property income. Total final property income. Okay. Now, don't live in fantasy. My last words, very important words. Don't live in fantasy. Yes, you can do in this 15 marks. The first 5 marks was very easy. Accept it. First 5 marks easy. In the second capital allowance section, yes, doors and windows you can do mistake. Staircase you can do mistake. All the remaining things came in previous past paper. So out of that 4, if you can score 2 marks, let's go prudent. So 5 plus 2, 7 marks. Then short life asset. Short life asset. Why do we depool short life asset? This definition is written in my notes. When I teach, it's written in my notes. You can go and check. Why do we depool SLA? I write this heading, to be very honest. Still, that was 2 marks requirement. Take 1 mark. So 5 plus 2, 7, and 1 mark in SLA, 8 marks. And then property income. In the property income, you can at least do this 16560, you can do it. This 16550 is premium receipt thing, at least you can do it. So yes, in this property income, this was 4 marks requirement. If you scored 2 marks, in property income, still you can have 10 marks out of 15. Please say thanks to your God. It's very good. It's very good. Who wants 100 marks? I don't want 100 marks and from anybody of you. Please don't do this favor to me. So If you can score 10 marks out of this 15, it's very good. It's not good, it's excellent. Similarly, in the last question, the partnership part, and that if you score 10 marks in that, 20, and 5 to 7 marks in that planning question. So if you score 25 or 27 marks out of 40, still it's excellent. You have other 60 marks as well in the paper. Just think. So plan your paper in this way that yes, mistakes are there. There are a lot of things you have to learn, and you have in the exam, you have to solve full paper, not just one area, not just individuals part, not just corporation part, not just employment, everything is there. So yes, you forget things. It's normal. It's normal. Even in past, many position holder students forgot things. Even, and you know, one special thing about the F6 paper, tax paper, you forgot things in your exams, and when you come out of the examination room, you remember, oh, I did this on the same time you got it, and you call your teacher, yes, I did this mistake. So it's common. It is there. So don't worry about it and be active. And in WhatsApp group, you should help your friends. You know, I say to my students that how to memorize things in F6, how to by keep doing exam kit, by keep revising the short notes type things, or by keep discussing. So if you help somebody in this way, you can revise yourself as well. But one more thing, don't use WhatsApp group in a negative way. Don't ask foolish questions, or please maintain the discipline. Okay, maintain the discipline. Take care and best of luck for your exam. Allah Hafiz.